What's good, YouTube? Welcome back to another video, and today we are going to be talking about lot sizes. Now, a lot of traders, they always be blowing accounts and they don't actually know what is the correct lot sizes or position sizes, and they just don't know how lot sizes work. So in this video, I'm going to be breaking down from lot sizes to pips, everything that you need to know when it comes to placing a position in the market. We are going to be looking at TradingView. We are going to be looking at the markets. I have made a video, I think it's around 20 minutes long, with regards to this, and I tried to break this down. I also show you gold as well, because gold is something that I trade, and I know a lot of my viewers trade gold as well. So I want to make sure you actually understand the difference between a normal currency pair and gold, because they are two different. So you want to make sure you watch this video entirely. If you haven't already, make sure you subscribe and join the community. We are growing very fast, and I did promise you in my last video that I am going to be much more consistent, and that's what I'm giving you guys. So I want to make sure that I share everything with you, but in order for me to do that, I would like you to subscribe. So make sure you subscribe so that you get to see every single thing that I do, every single trade I do, every journal that I make. And again, if you haven't seen my Instagram, make sure you go check out my Instagram as well. We're growing very, very fast on Instagram. Most of my analysis is actually on Instagram. I make reels on analysis. So make sure you go check that out as well. Everything will be down in the description below. And yeah, it's almost 2024. I'm not too sure if this video will be coming out for 2024 or not, but it is almost 2024. So, like I said to you guys in my last video, 2024 is going to be a crazy year. We're going to be consistent. We're going to be showing much more in-depth video with trading and with lifestyle as well, and show you, the way a trader would live and day in their lives and everything that you would love to see. It's going to be on this channel, so make sure you don't miss out and turn that bell notification on. If you don't turn that bell notification on, it won't secure that subscribe button. So make sure you subscribe and turn that bell notification on. And before you actually start watching this video, make sure you just go like the video as well, because you already know you're going to like this video. Other than that, guys, let's just get right into it. It depends on how you trade as well. It all depends on the market you're looking at. So if you're looking at, for example, if you're looking at gold, you're going to be risking a little bit more different, which we'll have a look at gold as well later on in this video. But if we just go for a simple Euro USD, a simple pair that moves not as fast, and we can then have a look at the pips that we would use to risk and lot sizes. Okay. Now, before we look into lot sizes that we would use, you need to first understand which time frame you're using. So if you're a day trader or a scalper, you wouldn't want to use a day time frame to place trades, because if you place a trade and you're trying to be in and out of the market, let's say you place a trade at the beginning of this candlestick and try end at this candlestick, your stop loss, you don't know where to put your stop loss, right? You don't really know exactly. Your stop loss will probably become bigger than the amount that you're trying to win. With regards to swing traders, I would recommend you guys use the day time frames. If you're a day trader, again, 1 hour to look for entries is more than enough. If you're a swing trader, you can scale into the 5 or 1 minute. It depends on the way your trading style is. Me personally, 1 hour is the best time frame for me to use. But again, for someone else, it might be different. But in regards to this video, we're not really looking at which time frames to use. We're actually looking at risk. So looking at the market, what we're going to do is I'm just going to show you some potential trades in the market that we would have taken, and I'm going to show you the risk that we would have taken, and I want to more emphasize on the risk and the lot sizes we use. We're not going to be looking at take profits or entries in this video. We're just trying to look at the risk that we would use. So I'm going to try and show you some trades that I would have personally taken if I was in the market. I'm not saying that I've taken these trades, but these are still going through my rules. I like to use technical analysis. I like to use, candlestick formations, and that's just the way I trade. So I can see already, just look at the market. It's opportunity here, opportunity over here. Two tweezer bottoms that I can see. So what we're going to do is we're going to first look at over here. I can see two tweezer bottoms making, so for me, that's an entry right there. So if we just go for a long position now, just as you are a trader, if you me doing this right now is not me placing a trade in the live market. This is just basically a tool that you use on TradingView to mask out basically trades that you want to see. Now, when you do this, you can obviously put it in your MetaTrader, or if you're using TradingView for trading, then yes, you can then place trades. But this tool right here is just to help us understand how much you're risking. Because before you place trades, you want to first understand how much you're risking. Now, with Euro USD, it doesn't move 100, 200 pips. So the level of risk that we'll have will be much smaller than the level of risk that we would have in other markets, right? So for example, in this trade, I will just put it at 10 pips, just to be honest, just to make things much more easier. And then we'll put this at the next key level, which will be 1.11, 1.11. Okay. Now, this is a 10 pip trade. So if I just quickly, this is 10 pips. Oh, pips. Okay. This is a 10 pip trade, meaning that, and it's a 1-to-6 ratio. So this means that I'm risking 10 pips to gain, 6 times the amount of risk that I'm getting, basically. So this is 10 pips, and then that will be 60 pips. Okay. Now, so just looking at the market, we don't really care too much about the reward. Okay, when we're risking, we're not gonna look at the lot size. When I first started trading, the first thing I used to do was, oh, let me calculate actually how much I'm gonna win, so then I will see if it's worth my trade. That's the worst way to do it. That's the opposite, right? You don't want to do it that way. You don't want to be looking at how many pips you're rewarding. You want to look at how much you're risking, because this is what is going to be affecting your account. This won't. This is going to make your account better, bigger. This won't. This will affect your account. So we are risking 10 pips, right? Now, if you have an account with a standard lot size, so one standard lot, right? This would be £100 that we'd be risking. Okay, so one standard lot, let me just write this down, equals £100. Okay, and this is if you use a standard lot. So the way to do that is you do so a standard lot would basically be 10 times the amount of pips that you're risking, right? So 10. So again, if you do a 0.1, so if I just write a 0.1 lot would equal to £10. Okay, so this is now you can see that. So with this trade, I'm risking £100 if it's one standard lot size. I'm risking £10, so it'll be 0.1 times 10. 1 times 10. Sorry about that. It gets very confusing when it comes to the standard and lot size, but this is how the conversion works. So a 0.1 means I'm risking £10. A standard lot size means I'm risking £100, and then obviously if we're going for a 0.01, then that would be £1, which would be a smaller risk. Now, if we look at the reward, we are then, again, this would be £60 for 0.1, £600 for a standard lot size. Okay, so you can see that now, with regards to this trade, we are, we're making 6 times the amount that we're risking, but also it depends on our account now. So if I had an £100 account, let's say our account size was £100, right? Which majority people have around, if you're starting with trading, you probably have around £100 to £200 account. If you are risking one standard lot size, you're risking your whole account. Now, I'm not too sure if your broker would allow that, but you will be risking your whole account. Now, with regards to your 0.1, you're then risking £10, which is 10% of this account, which makes more sense if you have a smaller account. Now, a lot of people, when they're trading, they'll try to say risk, let's say, 2 to 3% of your account. Well, if you have a £100 account and you want to risk 2 to 3%, you won't be seeing the gains you want to see. That's if you're trying to be very conservative. Now, if you're being very, very aggressive, the 0.1 would be really, really good. If not, you can then go for a 0.05 lot size, right? Which that will equal to £5, right? Now, this is for an account which, let's say you got an £100 account, you're risking £5 to make around 30, right? So that makes more sense on a £100 account. Again, this is a 1 to 6 ratio. So if you had a 1 to 3 or 1 to 4, 1 to 5, you can then do the same conversion rates here. So let's look at another trade and try and, so I can see it tweeze the bottom here as well. And this is actually a trade that we'll be able to see the profit as well. So let's say we place another trade over here. This is just another example. This time we're going to be putting our stop loss just below these lows here. So it's around 17 pips. Let's try and make it 20 pips just to make things easier. 20 pips, and we'll just do take profit on our next, so 1.105. Let's do that. Okay, so it hasn't actually hit our take profit yet, but let's just still do the calculations. So if I just make this smaller for a second. So again, this is 20 pips, guys, okay? Now, just to show you how I'm calculating 20 pips is when you have a look at your, when you put your tool out for long position and short position, long and short, you'll see that at the bottom over here, it will give us 20. Just over here, it disappears. Let me actually just, so as always show stats. So you can see over here, it's showing me 20 pips, okay? Now, on the markets, it will actually show you 20.1, but we can just look at it as 20 pips. Now, this is 20 pips. The reward, so this is 1 to 3. So without looking over here, I already know that if this is 20 pips, let's do 20 times 3, it will be 60 pips. Now, again, this is another 60 pip trade. So you can see that with Euro USD already, just off the back, you already know you're not going to be hitting 100 pip trades. You're going to be looking at around 60 pips, 50 pip trades. So your risk has to be at least, 10, 20 pips. Now, you don't want to be aggressive and put your stop loss really, really tight over here, as it could, potentially stop you out. On this case, it didn't, but just in case you don't want to be stopped out. So we'll go for a 20 pip trade. So again, we're doing the same metric. So let's say this time, so let's say we do a standard lot size again. So this time it's 20 pip risk. So a standard lot size, so one standard lot will equal to £200, okay? So again, I'm risking £200 for this trade. If that doesn't seem plausible, so again, if I had a £100 account, this wouldn't make sense because I'm risking my whole account. So let's say I had a £1,000 account this time, £200 will make sense. And then if I'm getting £200, I'm then getting £600 from that standard lot size, which then makes a load of sense for a £1,000 account, right? You're basically making around 50% gains. Now, if you do a 0.1 lot size, let's do lot, that will then become £20, okay? And you just want to work this out in your head. So when you're a trader, you don't want to be you don't want to be looking at the market and calculating this like this. You want to just get it on quick with you. The more trades you take, the more better you'll become. So if you are doing for example here 0.1 lots will be £20, 0.01 will be £2, 0.05, so 0.5 would be £10. Okay, so I'll put that in for you guys as well. 0.05 lot equals £10, and so this is how the conversions will be. So now you have to think, okay, which one makes sense from my account? Again, we're only looking at the risk. We're not looking at the reward because we already know the reward will always be greater. As long as you stick to your rules of having a 1 to 3, 1 to 4, 1 to 5, 1 to 6, or 1 to 2, anything above that. So with me, I try to tend to go for anything above 1 to 3. If I see a 1 to 2 ratio and I know that it's going to be a good trade, I'll go for it. But most of the time, I'm trying to go for anything above 1 to 3. So I don't care about what's happening with the reward. I only care about what's happening with the risk because this is what's going to affect my account. This is what's going to put me in drawdowns. So I want to make sure I'm not risking my whole account for one trade. It wouldn't make sense because I also trade other accounts, other markets as well. I want to make sure that I can place this trade if I hit a loss, I can still continue to place trades. So again, with this trade, it's 20 pips. So this is what I'm risking. Let's say I have £1,000 account. It could make sense for this, this, or this, right? I can't go for a 2 lot size now because then that'll be £400. I'm risking, more than, almost 50% of my account. It wouldn't make sense. Again, if you're aggressive, you can do that, but risking £500 is not a trade that I want to take, especially it only takes you around 2 trades to blow your account. Whereas if you do 200, you can place around 5 trades. It's still very aggressive. It's still a very aggressive approach, but it will help you grow your account. And if that's the way you're trading, then yes, by all means. But then a 0.1, again, you can also go 0.8, 0.7, 0.5. So a 0.5 in this would be £100, right? So you can then go in between. So if I just draw that out as well, so a 0.5, so not 0.05, but a 0.5 lot will equal 100, will equal £100. So now you can kind of understand that, okay, so I've got a 0.1, that's 20, 0.5, which is 100, that makes sense. Okay, I'm going to do 0.5, right? Now there's different lot sizes. You've got 0.1, 0.2, 0.3, 0.4, 0.5. They all have different conversions, but when it comes to trading, you want to make sure that you are risking less of your account. You don't want to be putting a standard lot size on a £100 account because, first of all, your broker might not allow it, but second of all, it just wouldn't make sense on a small account. So if you see them traders are putting a standard lot size, it wouldn't make sense for you to do that if you have a small account, especially if you're not going for that aggressive approach. And if you're just going for that, just trying to grow your account like a normal trader, you wouldn't want to just hop on the markets and go for a standard lot size unless you are risking 10 pips. Then cool, go for that standard lot size. But it wouldn't make sense if you're going for 20 pips, 30 pips. You have a risk of the market going the other way. You want to help your psychology, and you don't want to be trading ridiculous amount of money in the markets, especially when you want to you want to be risking, let's say, 5 to 10% of your account if you're just starting up, right? If you're just starting up, you want to risk 5 to 10%. I wouldn't go any more than, if I have £1,000 account, anything more than a 0.5 lot. Even a 0.5 lot, put that in, I'll be making around £300, right? Around £300 for this trade is really, really good. Okay, is where you're trading. Let's say, I understand if you're just going in the markets. Let me just clear this. If you're just going in the markets and you have a small account, yes, you will have small profits, but you just need to understand that that's how the markets are. You need to build the profit, you need to build the revenue, you need to build the account size first. So the way to do that is start off with these small lot sizes. Well, this will be over here, but is to try out with these small lot sizes. When I first started, I was using a 0.05, a 0.06, a 0.01, a micro lot size, right? I was using those lot sizes, and that's literally because I didn't want to risk more in my account and actually want to understand the markets, right? Now, if we just look at gold quickly, gold is a little bit different. It moves very, very fast. So just looking at a trade that I did over here. So this is a trade that I did, a 1 to 2 risk to reward ratio. Now, gold is a little bit different when it comes to conversions as well. So again, over here it says 577. Now with gold, it's a little bit different. So this is not 577 pips. This is 577 points in the market. So points is a little bit different. So with this, the way I convert it is just it for me. I just get rid of the last digit. Okay, so the last number. So really, the market is at the moment. Let's say where the market is right now is at 2065.69. It wouldn't be 0.690, right? Because as traders, when brokers, they kind of just get rid of that last number. The last number is for us as a trader, but if you look when you're placing trades as well, you won't actually be placing that last number. You always be placing 75, 76. You wouldn't be placing 757, right? That's too. Even when you're a scalper, you would understand that you couldn't do that on a broker. But looking at this trade, this is a 1 to 2 ratio. I'm risking 57 pips, right? So let's put that down. 57 pips. 57 pips. for let's just put this like this, 57 pips for around 126 pips. Okay, again, ignoring that number at the last figure, right? So 100 and let's just say 120 pips. Okay. So again, we are not worried about the reward. We're worried. We want to know about the risk. Sorry. Let's make this 60 pips just to make things easier. Let's make this 60 pips. So again, it's now the same thing as what we did with Euro USD. So one standard lot size. One standard lot will equal to, so it was 60 pips, so that'll be £600, right? One standard lot is £600, okay? A 0.1, so 0.1 will be 1 times 60, so 0.1 lot equals £60. Oh, £60. And again, if we go for a 0.05, put that there as well. 0.5 lot, that will equal to £30. Okay. So you can see now we have 3 different numbers. Again, this is something that you do in your head, or you can write it down, but it makes it, after a while, you understand that this will just happen quick. Let's say we have an account size of £100 again. I'll be using a 0.05. You can see now that we are risking more pips. Even though the stop loss looks very, very tight, this is just the way how gold moves. This is a trade that I took last week. And this is something that you need to understand when you're risking, right? So a 0.05, £30. It makes sense if you have a small account, like a £100 account. If you have a £1,000 account, I still wouldn't even jump to the standard lot size, especially with gold. I'll still stick with the 0.1 lots or 0.2 or 0.3, things like that, okay? Again, if I went for a 0.5, that'd be £300. That's something that's reasonable in a £1,000 account. That's if, again, you're aggressive. If you're only trying to risk 1 to 2%, you know, the 0.1 lot size is the way to go. So with regards to the risk to reward, it's always understand that, when it comes to lot sizes, it's always the best thing to understand is your risk. Forget about your reward, because the reward is always, if you're gonna have a trade that's above 1 to 2, 1 to 3, 1 to 4 ratio, risk to reward ratio, then you're always gonna have double the profits or triple the profits of what you're risking. But what you don't want to do is forget about what you're risking and think about, 120 pips. Oh, that would look nice. You know, if 120 pips on a standard lot size is around, around £12,000. Oh, that's really nice. You know. But then when you look at sorry, not 12,000, 1,200, sorry, is £1,200. So that looks really, really nice, right? But then you look at your account, it's like, but I'm risking £600. Doesn't make sense if you've got a £1,000 account. Yes, you're basically making, you're doubling your account, you're flipping it, but would it make sense if you hit that loss, you will have not that much capital to trade for your next trade? You always want to think, I want to place multiple trades in the market. I don't want to be in the market and just place one trade and blow my account. We need to minimize blowing our accounts. Yes, when I first started trading, yes, I was blowing accounts because all I was trying to do was flip accounts. You don't want to be flipping accounts. You want to grow your account. Now, yes, you can have a separate account where you're trying to flip, but that's play money. You don't want to be doing that. You want to understand risk management. You want to understand your lot sizes. You want to understand how the market moves when it comes to that. So with regards to this video, you want to make sure that you are heavy on lot sizes. You don't want to be placing trades and then realizing that you're risking a lot and then you have to move your stop loss because it's too much money that you're risking. When you place a stop loss, do not move that stop loss. Keep that stop loss there, be disciplined, and fix with your lot sizes. If you're trading and you're halfway through, let's say this trade, you can, by all means, close half of the, so let's say I was 0.1, right? I'm risking 60 and I close half, now I'm risking 30, right? By all means, do that, right? But don't move your stop loss. Yes, you can move your take profit. Your take profit can be floating, but your stop loss has to always be a fixed position this will help you discipline your trades. This will help you with your lot sizes, your risk management. This will help you then change your mindset when it comes to trading. Because when you do place a trade, let's say we go for a buy over here, right? And I then place a trade. Let's say I go for a long position, place a trade over here. I see my stop loss over here, take profits. Let's just say to next key level. Let's just say it's 2075, right? This doesn't look sense to me, right? Yes, okay, I am getting around 83 pips, but I'm risking a lot more, right? It doesn't make sense, so I wouldn't trade that. So you need to understand that so that when you do look at trade opportunities, you get a bit more patient, because then you're like, okay, cool. Actually, you know what? I will wait. I will wait for the market to give me a better entry so that I'm not risking a lot more, right? For example, over here, I could have entered over here, which is very, very risky, but I ended up entering over here because I wanted to wait for that bullish candlestick. Once I've seen a bullish candlestick, I was like, okay, I'm entering. Yes, the markets did fluctuate, but it did not hit my stop loss, because I was making sure that I understood, okay, I'm risking 57 pips. My lot size has got to be a bit smaller. Yes, my profit's going to be a little bit smaller too, but I won't be blowing my account. So I hope you lot actually took some information from this and you actually start putting a lot more pressure on the lot sizes rather than, you know, the reward, and you actually understand how lot sizes work and how placing positions work. If you haven't seen already my entry videos or my strategy videos, make sure you go check it out. And that, guys, I hope you lot enjoyed this video. You learned something new. Even if you learned even just one little thing, just drop a like and subscribe, join the community. Other than that, guys, I hope you lot enjoyed. I'll see you lot in my next trading video.